I want to turn our attention to one other sector of the market that traded lower yesterday, in the green today. That would be the oil market. There, as you see, WTI just below $67 a barrel, retreating again though, still at 2-month lows there. And for more on where we can go from here in the wake of the shakeout we saw in the OPEC Plus negotiations, I want to bring on Bob Iaccino, Path Trading Partners co-founder and chief market strategist, joins us now. And Bob, I mean, when we look at it, I mean, we knew that UAE officials there were really pushing to delay or push for more of the supply coming back here. I mean, how is it all shaking out to you if we were seeing some of the jitters around the Delta variant and what that could do to growth? If you do have more oil coming on the market now, how do you break it all down?
Well, I look at it basically like this. You're looking at supply and demand dynamics developing on an almost day-to-day basis. The disruption or discord, I should say, between the UAE and Saudi Arabia was likely to get resolved, but the market had to trade it as if it wasn't. And that's what caused us to break out of the range that we had been in for most of March, April, and May. And what we did yesterday when that discord was resolved was trade back down to the top of that range. And that's what crude oil does. Crude oil has a characteristic. It trades in a channel which represents sort of the best you can expect for supply and demand balance or dynamics. And then it breaks out of those channels and either resets a new channel or goes into a trend as we reprice to newer, more dramatic dynamics. And that hasn't happened. What's happened is we broke out to a higher demand and a slightly higher supply dynamic, or range, I should say. So we're looking at this range being from about 65 to 76, wide range, but that's what crude oil does. And you mentioned the Delta variant. That's been my biggest concern over the last 3 or 4 weeks as to how that plays out with reference to the short-term demand. You always get these overreaches on the potential demand or the potential lack of supply or the potential excess supply. We've now repriced until we find out whether the Delta variant is actually going to affect the demand we've seen or not. Right now, it's just the potential for lower demand.
Yeah, but we saw those jitters really materialize yesterday. And to your point, Bob, it really does seem like the question right now is the Delta variant going to force a return to what we saw last year at the height of the pandemic and the restrictions there? When you look at it from those dynamics, what does it mean in terms of where oil is likely to move? It sounds like you think it's sort of just a short-term concern if things stay the way that they are right now.
Well, I think you saw an ill-timed decision between Saudi Arabia and the UAE, not necessarily their fault, but this should have been resolved at the meeting about 2.5, 3 weeks ago, rather than 3 weeks later when the Delta variant became the number one headline referencing COVID and referencing potentially more lockdowns. I don't expect to see a return to what we saw last year, because what tends to happen in these situations, not just with crude oil, but with stocks as well, is that you see these reactions becoming smaller and smaller and less pronounced. We had the big drop during the COVID shutdowns, which was justified. And then we had a big rally back, again, not just in crude oil, but in equities as well. I suspect this is the same thing, that we'll get a repricing, which is what happened yesterday, the timing of excess supply with the news stories about potentially decreased demand. We've seen refinery utilization above 90 for 6 consecutive weeks. That represents demand on the ground. How much refined product is being pushed out there? How much a refinery is being stressed to their limits, which is a lot higher than where they're at now. So that's going to be the lead indicator to me. Watch refinery utilization. If it drops back below 90, then the perception of shrinking demand is real, rather than just being the potential of it and getting active investors and traders to cover and push these stocks down.
Yeah, overall, looking at about a 2 million barrel per day increase from August to December 2021 that came out of this. But when we think about the global recovery around Delta, I mean, we keep hearing from doctors saying that maybe here in the U.S., given our vaccination status, maybe not all that worrisome when you think about cases versus hospitalizations and deaths. But elsewhere around the globe, there are some serious concerns. So when you look at the demand side of the equation, maybe less worry about the U.S., but what other markets there are you watching as maybe swing factors that could dislocate that equilibrium you're talking about between supply and demand?
Well, one in terms of real demand and one in terms of sort of representative of global demand. That would be China as the real demand. How bad is it getting there, and how much is their demand going to drop? We saw a miss on Chinese GDP. People are expecting the People's Bank of China to step in, but the People's Bank of China can't eliminate Delta variant increases in cases. The representative one for the globe would be the UK to me, simply because they're the next step in reducing lockdowns and going to back to pre-pandemic type of society, which the US leads in. If they turn around and go back, then I'd be concerned about the rest of the world coming out of it. As you mentioned, I don't like to comment on the medical part of it. I just look toward the perception of lower demand and actual lower demand. Right now we have the perception, and I'm kind of watching if it's going to be a very real thing or not.
Yeah, hit it market wide, but really clear in the oil patch right now, at least in terms of the prices we're seeing play out. But Bob Iaccino, Path Trading Partners co-founder, chief market strategist, appreciate you taking the time here to chat with us. Be